Good evening, everyone. Welcome to the channel. Today I am going to talk about FWD interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. FWD Group Holdings Limited offers a diverse range of businesses and services, including underwriting insurance products, life insurance, accident and health insurance, savings plans, distribution of related investment, and other financial service products. The stock price of FWD Group Holdings Limited has increased by over 25.99% in the past year, primarily driven by its initial public offering, IPO, and subsequent positive financial and rating news. Several key events have contributed to this increase. The successful IPO on July 7, 2025, raised approximately US $466 million in gross proceeds, providing the company with increased capital flexibility. Moody's Ratings upgraded FWD Group Holdings Limited's issuer rating to Bond from Botwo, enhancing the company's capital flexibility following its listing. Goldman Sachs initiated coverage on FWD Group 1828 with a buy rating and a price target, signaling positive analyst sentiment. The company reported record interim results for the first half of 2025, including a 38% increase in new business sales and a 9% rise in operating profit after tax. These events have collectively contributed to FWD Group's stock price reaching a 52-week high of HK $49.26, representing an increase of approximately 29.63% from its IPO price. The primary drivers of revenue growth are multifaceted and widespread across various regions and channels. Key contributors include 1. New business sales growth. A 38% increase in new business sales and a 34% year-on-year growth in contractual service margin, CSM, demonstrate the company's ability to attract and retain customers. 2. Expansion into emerging markets. Strong new business sales growth in emerging markets, particularly Indonesia's BRI Life being number 1 in bancassurance, highlights the potential for growth in these regions. 3. Product innovation. The introduction of 25 new products in the first half of 2025 and record interim results under IFRS 17 showcase the company's commitment to product development and financial performance. 4. Digital transformation. Growing demand for life insurance products driven by demographic and macroeconomic tailwinds, expanding affluent class contributing to an increasing HNW individual population, and resumption of travel between Hong Kong, Macau, and mainland China driving sales to MCVS demonstrate the importance of digital commerce distribution. 5. Bancassurance partnerships. Strong customer-led approach, financial inclusion and innovation, partnership with Security Bank extended in 2024, Sharia-compliant life insurance license in Indonesia, 2015, and bancassurance partnerships with NextGen Banca and VCB highlight the significance of these partnerships. On the other hand, the primary drivers of revenue decline include 1. Decrease in single premiums. A 39% decrease in Thailand and Cambodia's single premiums is a significant contributor to revenue decline. 2. Net finance income/expenses from insurance contracts. A minus 826% change in net finance income/expenses from insurance contracts, resulting in a loss of $1,266 million to $137 million, is another key driver of revenue decline. 3. Premium received. A decrease in premium received, amounting to minus $91 and minus $222 million, further contributes to the revenue decline. These drivers demonstrate the complexities involved in understanding revenue growth and decline, highlighting the need for a comprehensive analysis of various factors influencing business performance. Net income and profit margins have undergone significant changes over the past year. Net income has increased from $3 million to a record $47 million in the 6 months ended June 2025, representing a substantial growth of 1,466%. This increase is also reflected in the net income for the full year, which rose from $213 million to $251 million. Profit margins have also shown improvement. The operating profit after tax margin before interest rate and operating assumption changes was 67%, higher than the same period in 2024. Additionally, the new business contractual service margin, CSM, increased by 34% to $794 million. However, the net investment result decreased by 18%. Region-wise, Hong Kong and emerging markets have shown significant improvement in profit margins, while Japan and US have experienced decline. The operating tax has increased by 33%, but this is likely due to changes in tax regulations rather than a decrease in profitability. Overall, the company's financial performance has improved significantly over the past year, driven by increases in net income and profit margins. However, there are regional variations that need to be addressed. The company's financial performance indicates a consistent generation of positive operating cash flow. This trend is evident in the statements on pages 10 and 64, which confirm the company's ability to generate cash from its core operations. Furthermore, the net cash provided by operating activities for both 2024, $310, and 2025, $128, demonstrates a stable financial position, suggesting that the company is effectively managing its resources and generating sufficient cash to support its business activities. The company's debt level has experienced mixed results, with slight decreases in some instances and increases in others. While total debt securities rose by 16%, other reports indicate a decrease in debt level from 25.5% to 23.7%. Interest expenses have also seen significant changes, increasing in some cases while remaining relatively stable or unchanged in others. The company's financial performance varied across different segments and regions. Notably, Hong Kong and Macau performed well, with a 44% increase in economic value, EV. Japan also saw growth, with a 7% EV increase. In contrast, emerging markets experienced a decline of 6% in EV. Thailand and Cambodia showed mixed results, with a 9% EV increase in some areas but a decrease in others. FWD Indonesia and BRI Life struggled due to increased government bond yields, while FWD Philippines faced higher investment returns assumptions. On the other hand, FWD Japan benefited from decreased government bond yields and improved expense inflation rates. The corporate center expenses and financing segments also underperformed. However, operating entities in FWD Japan's onshore business demonstrated resilience. Overall, the company's financial performance was characterized by both growth and challenges across various regions and segments. Management's outlook and strategy overview. The company's management emphasizes a positive outlook for growth, driven by new business expansion and favorable foreign exchange impacts. They aim to enhance capital position and financial flexibility through the IPO proceeds, potentially by reducing debt. A multi-channel distribution strategy and product innovation are key focus areas. Digital transformation is a crucial aspect of their growth strategy, with automated underwriting and data analytics capabilities being implemented. The company also sees significant potential in emerging markets, particularly in Thailand's life insurance market, where they plan to sustainably grow business through a multi-channel distribution model. Management prioritizes customer satisfaction, focusing on a customer-led approach to digital, distribution, and demographic drivers across Asia. They believe that digitally empowered distribution channels and customer propositions will be key growth engines for the company. Overall, their strategy is centered around creating long-term value by growing group embedded value and comprehensive tangible equity. The company has made several strategic moves through acquisitions and divestitures. Notably, it acquired ING's life insurance business and SCB Life, a life insurance entity of SCB. On the other hand, the company has decided to exit from underwriting new business in the Thailand corporate care segment by 2024, marking a significant divestiture move. The company has a history of paying dividends to its shareholders. This is evident from multiple references throughout the financial summary, including pages 2, 11, 69, 107, 135, and 140, all of which confirm that dividends have been paid. In addition to paying dividends, the company has also engaged in share buybacks. Specifically, it issued a total of 96,343,500 shares through its initial public offering, IPO, and overallotment option. That concludes the financial summary for FWD. Feel free to comment below, and I will be happy to answer them when possible.